Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that smells a little like trouble for a helium company. It seems they've gotten a note from Nasdaq and it's not a love letter. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we can continue the discussion. This is a Form 8K, which is basically a corporate bat signal. Companies use it to tell investors about big unexpected events. In this case, New Era Helium is reporting that they've received some warnings from Nasdaq, the stock exchange, where their shares are traded. The first issue is something called market value of publicly held shares, or MVPX for short. This is the total value of all the company's stock that's available to be traded by the public. Nasdaq requires companies to maintain a minimum MVPX, and New Era Helium has fallen below that line. Specifically, Nasdaq requires listed companies to have at least $15 million in MVPX was below that threshold for 30 consecutive business days. That's not good. Now they have been given 180 calendar days, which runs until November, to get their MVPX back above $15 million. If they can manage to keep it above that level for at least 10 consecutive business days, Nasdaq will consider the issue resolved. If they don't get their act together, their stock could be delisted. Delisting means that the company's stock would no longer be traded on the Nasdaq exchange, making it harder for investors to buy and sell shares, which usually makes the stock price fall. But wait, there's more. The second problem is the minimum bid price requirement. Nasdaq requires companies to maintain a minimum share price of 1 Caesarea. New Era Helium stock price has been below that for 30 consecutive business days. This is also not good. It means investors are selling the stock and there isn't enough buying pressure to keep the price above $1. Just like with the MVPX issue, New Era Helium has 180 calendar days, which run until November to get its share price back above $1 and keep it there for at least 10 consecutive business days. If they can't, they could face delisting again. However, there's a possible lifeline. If the company doesn't regain compliance during the initial period, they may be eligible for an additional compliance period if they apply to transfer to the capital market tier of Nasdaq. This market has different, often lower requirements. To do so, they would have to meet all the listing standards for the capital market except for the minimum bid price, but if they don't, there may be a delisting determination. At that time, the company may appeal to a Nasdaq hearing panel, but there are no guarantees. The company is saying that these notifications have no immediate effect. However, it is definitely not something that any investor wants to see. The report was signed by Will Gray II, the company's chief executive officer. Now, let's step back and analyze what's going on here. New Era Helium is facing two major challenges to its Nasdaq listing. The company's low market value and low share price suggest that investors have lost confidence. This could be due to a number of factors, such as poor financial performance, industry headwinds, or company-specific issues. The fact that they received two notices at once is a red flag. It suggests that the company's problems are more serious than a temporary dip in the stock market. The company's ability to regain compliance with Nasdaq's listing rules will depend on its ability to improve its financial performance and restore investor confidence. However, the report provides very little detail. We don't know exactly why the market value and share price have declined so sharply. We don't know what steps the company is taking to address these issues. Without more information, it's difficult to assess the company's chances of success. The company is saying it is working to regain compliance. So what's the verdict? New Era Helium is facing a serious challenge to its Nasdaq listing. The company needs to take decisive action to improve its financial performance and restore investor confidence. Otherwise, it could face delisting. Alright, that's our breakdown of New Era Helium's latest filing. What's your take on these notices and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description where you can discuss this and many other filings and topics. Thanks for watching. See you next time.